Okay, thank you so much all. This is Prashant Kumar. I'm a certified commercial investment member. We here at Cashflow Champs, we are helping investors gain financial freedom through passive investments in real estate. We will be talking about cap rates today. Most of you should know what cap rate is, but we will go into the details. I'm not an attorney or financial advisor or a tax advisor or an accountant. This webinar is only for the information and entertainment purposes only. Please seek professional advice from appropriate personnel. Just a disclaimer, SEC asked us to do that. So just before we start, if you want to talk to any of us, feel free to connect with us. We would love to talk to you. There are 3 QR codes on this screen. If you can take the screenshot if you want. First one is, hang on, I see somebody raise hand. Is there anything I can respond? Can you write in chat window or in Q&A box? Santonio, please feel free to ask any questions. Do you see my presentation? I just want to confirm that if you can respond in Q&A or in chat. I'm assuming that you are seeing my presentation. Basically, as I said, yes, thanks for confirming. As I said, if you want to connect with us, feel free to schedule a call with us. The first QR code. Second is we do multifamily underwriting. We have such Saturday sessions, which are free of charge. I mean, we have never charged anything for years. We have been doing them every Saturday. You want to sign up for them, feel free to scan the middle QR code and basically, yeah. So Q&A box is good enough. You can write in Q&A box basically. And in the coaching, basically we have an inner circle, folks who want to be part of, start their career in multifamily investing as an active investor. We have a small inner circle where we do deals with our, fellow students. And within 3 to 6 months, folks are doing deals already in multifamily. If you want to know more or want to be on wait list, very small group of people, like less than 10 of them, 10 of us, we try to do deals together. So feel free to scan the rightmost QR code. All right. So what is cap rate? Okay. Everybody knows this is the standard definition. Cap rate, is basically, everybody knows what a cap rate is. Cap rate is income divided by market value, right? Net operating income, which is nothing but, all the rents received, all the operating income minus all operating expenses. So once we have all the operating income and once we know all the operating expenses, we find out what is the net operating income of the property yearly. And based on that, when we divide that net operating income by market value or a price at which you are buying the property, it gives you cap rate. So if your net operating income for a year is 100,000 and your property value is 1 million, your cap rate is 100,000 divided by 1 million is 0.1, which is equal to 10%. That's the really technical formula of calculating the cap rate, but it's a measure of potential return on an investment for a commercial property, right? So it's a very, very widely used formula. It's a very widely used approach that we take in real estate investment. So what does cap rate tell you? I mean, it tells you basically if you have, it gives you the comparability, right? Cap rate provides a way to compare the potential return of different property. because cap rate are based on the properties net operating income and the market value that allow for apple to apple comparison between properties that otherwise might be difficult for us. So cap rate gives the comparability. My cap rate on this property is 10, the cap rate on a different property is 9, which one is better, things like that. In addition to comparability, cap rate gives you the profitability, right? Calculating cap rate helps investor and other commercial real estate stakeholder assess the potential profitability on a property. A low cap rate indicates that a property may offer stable long-term cash flow, while a high cap rate suggests that a property may carry more risk and require additional due diligence. So a higher cap rate definitely is not a good, although it gives you the potential of high returns, but a higher cap rate is termed as a higher cap rate is termed as basically a high risk as well. So one is comparability, second is profitability. And then you have valuation, right? When you are buying a property, cap rate are often used to value commercial properties. By calculating cap rate and applying it to the property's net operating income, investors and appraisers can estimate the property value based on its income generating potential. So you are valuing the property basically. If your NOI is 100,000 and the cap rate is 5%, you will divide 100,000 divided by 5%. You will say my valuation of this property is 2 million. So with cap rate gives you a lot of insight into the market. You can compare the different properties. You can find out what is the profitability. You can find the valuation. At the same time, you can do the risk assessment, right? Cap rate can also be used to assess the risk associated with a particular property, right? If a property has a high cap rate compared to the other properties, a higher cap rate means higher risk because it may have higher vacancies. The tenant quality may be poor, or the economic conditions of the area are not good. So a higher cap rate is not always mean higher income. It means higher risk as well. So we need to be very careful. If the prevailing cap rate in the market is 6 and you are buying a property at 7 or 8% cap rate, it means there's something on that property which is not favorable. There are some risk associated. That's why you are going for a higher cap rate, meaning lower pricing, basically. So cap rate formula actually assumes the NOI and the market value used. This is a consistent formula, basically. So NOI should be based on the current market condition and the rental rate of the property. And the market value that we use, that should reflect similar properties in the similar condition. If there are discrepancies between income and value, the cap rate may not give you the right return, basically. So when we use cap rate, it should be for similar kind of market and similar kind of properties. We just need to be very careful with that. So what is a good cap rate? Based on what we just discussed, is a higher cap rate a good cap rate, or is it lower cap rate a good cap rate? A lower cap rate meaning that you are buying property at a higher value, but that property is stabilized, maybe interest rate is also low, and you have the potential to increase your NOI so that you can increase the valuation of the property in future. If you have a higher cap rate, a low cap rate could be between 3 to 5%, right? Or maybe 6%, something like that. A medium cap rate could be anywhere from 6 to 8%. And nowadays, I'm just talking about the multifamily. And there could be different asset classes where, like assisted living or something, where cap rates are a little bit higher, like 8 or 9 or even 10%. And a high cap rate is, if you are going into a D class area, where the higher cap rate is 9% or higher, meaning that you are getting into a riskier venture. So, I mean, necessarily a high cap rate is not a good cap rate. Okay. If you are in a mid-range, that probably is a better approach, in my opinion, based on our experience in multifamily. A low cap rate could be for an A-class asset, right? Office building, luxury retail space, or high-end multifamily properties, which is very stable, long and giving a long-term stable cash flow. There you could go for 3 to 5%. But if you are looking for, medium cap rate, anywhere from 5.5 to 8%, you could have properties that are class B office building, mid-tier retail centers, multifamily properties in suburban areas. Those are the ones I think most of the class B, class C kind of investors look for, because there is a potential. I mean, the risk is minimal, but the potential to increase the cap rate further based on the purchase price is there, because they improve the property and do the value addition, right? So one is low cap rate, second is medium cap rate, and third is high cap rate. We typically don't like to get into high cap rate areas, where obviously these are class C or class D office buildings, or the retail centers in less desirable locations, or multifamily properties in less prosperous neighborhoods, right? So we don't get into those. I mean, we usually recommend others not to get into those areas, basically. I just want to make sure. So as I said, what does high cap rate means? High cap rate means that, basically, it is a little bit riskier investment. So there are different theories on cap rates. Okay. One is income approach. We kind of touch base on some of these anyway. Income approach means, cap rate is primarily influenced by the income generation of the property, right? So it is assume that property value is directly proportional to the income generated by the property. However, higher cap rate means higher risk and lower value. Second is market expectation. So the cap rate reflects market expectation for future property performance. If an investor anticipate higher income growth or increased demand in a particular market, they may accept lower cap rate. So if you are in a class A area and you are anticipating income growth or increase in demand in that market, there you could go for a lower cap rate, so that in future the valuation of the property or the income of the property increases and your cap rate goes up a little bit. Third theory is your risk and return theory. Basically, as I already discussed, higher cap rate means higher risk, because investors require a higher return to compensate for increased risk, basically. So these are cap rate theories. They give a lot of insight about the market in general and about the property. The market comparison, as I discussed already, you are comparing similar properties, and investors use this theory to assess the relative value of the property compared to the other properties in the same market. So cap rate is just not a formula. It is really kind of gives you overall picture of the market, in the sense, for the similar property type, similar location, and similar market condition, how can I compare different properties? And if one property has higher cap rate, why is that? Is there any problem in the property? So there are a lot more information that we can get out of the cap rate that we have. The impact of interest rate on cap rate is, basically as the interest rate goes up, the cost of borrowing increases, right? So the finance, it becomes more expensive to finance a commercial property, and that reduces the demand, right? And that demand increases the cap rate. Increases the cap rate means the valuation of the property uh, goes down. So higher interest rate means higher cost of borrowing, and so that leads to lower demand, means lower valuation, meaning increase in cap rate. On the other hand, if the interest rate fall, cost of borrowing decreases, and that's what was happening over the last 5-6 years, except 2023, was interest rates were falling, cost of borrowing was decreasing, and it was becoming more affordable. Investors were able to afford more properties, and that was increasing that demand. That increase in demand was increasing the value of the property, and then cap rates were decreasing, right? So higher demand, lower cap rate, lower cost of borrowing, basically. So that's the impact of interest rates on cap rates. So I tried to give you a lot of information, but at the same time, there's much more to cap rate. But I will stop at this point because obviously we can talk about cap rate all day long. In addition to this presentation, I wanted to share one multifamily deal that we are doing currently, which is 506C deal. That is a loan assumption deal that we are doing in Atlanta. Again, as I said, we are medium cap rate kind of folks. We look for class B, class C assets where we have higher valuation, where we can do the value add, and so that's how we have found this property, Archway Apartments, 106 unit in Riverdale. And basically, the unique thing about this property is that it has a loan assumption. We have 3.79% interest rate for the next 7 years on this property. So that is the attractive debt term. The purchase price, is 13.4 million. Out of that, about 9.8 million is a loan that we have at 3.79%. So nowadays you don't hear that. So it's a value in an asset in a strong market in Atlanta. It provides us the upside potential through our value add program and operational efficiencies. For investor standpoint, it's a good 7% cash on cash return over 5 years, and in the end, basically overall returns are IRR is about 15%. So current ownership has already upgraded 60% of the property. We have some more work to do that we will continue to do over the next 2 years. So just a investment basically slide that if somebody invests 100,000, you see the total return in year 1 is 4,000, year 2 about 7,000, year 3 7,500, year 4 about 9,000, and when we dispose it off, around 65,000 on the money. So total return is about 92% in 5 years. That's the projection on this deal. That equates to about 18% annualized return, about 15% IRR, and average cash on cash of about 7.34. So just wanted to bring that there's an opportunity out here if anybody wants to invest. You want to learn more about this property, there is a webinar that we did. There is a presentation that we have. And if you want to know about more about this, there's a Invest Now QR code. So I would request you to take the screenshot of this and see if there's any interest. So in addition to that, feel free to register for next week's webinar. And If there are any questions, I'm here. We can talk more about it in Q&A box. Feel free to ask any questions about the presentation today, about the cap rate, or about the property that we have that we are closing in the next, I would say 30 days. So feel free to ask any questions if you have. Sounds good. I mean, looks like there are no questions. Yes, we are accepting Paradise. Thank you so much for asking. Yes, we are accepting investors in this deal. We have, this is a 506C deal, so it is open for accredited investors only. And if you click, I'm just take the screenshot of what I have on the screen, but the rightmost QR code is Invest Now. That can take you to our portal where you can learn more about this property. So the minimum is investment on this is 50,000. Usually we try to keep the minimum investment of 100, but here on this deal is a smaller deal. The minimum investment is 50,000. If nothing else, I would leave my email address and phone number. If you want to note it down, prashant@cashflowchamps.com, PRASHANT@cashflowchamps.com. And my phone number is 631-428-6479. So my email is my first name, PRASHANT@cashflowchamps.com. Sounds good. Thank you so much, all. Appreciate it. We will talk next week. Thank you so much for your time. Bye now.